Hello and welcome to this bite-sized training session looking at business interruption insurance claims. I'm Stephanie Reeves. I'm a Senior Associate in the Commercial Dispute Resolution team here at Owen Mitchell, and I'm going to be ably assisted by Ted Powell, who is a trainee. And we are going to be looking at business interruption insurance claims, which of course have been very topical over the last 12 to 18 months in particular. Now, this all started in early 2020, where businesses who were in financial difficulty as a result of the COVID-19 pandemic were seeing their insurance claims being rejected outright due to some pretty inconsistent and I think confused interpretations of those policies. That all culminated in a test case being brought by the FCA against 8 insurers. Now, that case went all the way to the Supreme Court in January 2021, and the objective of that case was to test the wording of some common business interruption insurance policies and to gain some clarity over the interpretation of some certain common wordings and understand whether COVID-19 related losses should be covered. So why is it important and why should you pay attention to this judgment? Well, the High Court and then the Supreme Court found largely in favour of the insured businesses, and this was quite a surprise in the market. The judgment is final, so it does bring us some of that much needed clarity. And whilst it's binding only on the 8 insurers that were parties to the test case, and even then it's only binding in relation to the 21 sample policies which were considered, it's really important because it provides us with some authoritative guidance for the interpretation of similar business interruption insurance policy wordings. Just to demonstrate kind of how wide-reaching this decision is. Quite early on, it was identified that some 370,000 policyholders holding policies issued by some 60 insurers may be affected by the outcome of this test case. And since, the FCA has worked with insurers to publish a list of around 450 policies which are affected by the judgment. And just on the latest data that we have at the time of recording this, so June 2021, so just over 4 months since the judgment, we can see that almost £280 million of final settlement payments and over £190 million of interim payments have been made by insurers to BII policyholders who are affected by this FCA test case judgment. So this therefore means that there are thousands of policyholders who now can recover loss, and therefore a valid BII claim could be a significant company asset and a lifeline for businesses in distress. So for lenders, what does this mean? Well, an insurance payout may well enable a borrower business who is in distress to keep trading, as opposed to potentially entering some sort of insolvency process. Going forward, this means that the business can continue to pay interest and borrow, avoiding the bank needing to take enforcement action. If a lender is looking to make a recovery, an insurance payout may increase the assets of the business that the lender can take a charge over. And finally, depending on the insurance policy structure, the lender may well be listed as a first loss payee for any insurance recovery. And this will, of course, mean that the lender can directly receive the insurance payout that the borrower business is entitled to. Alternatively, the lender may have their interest noted on the insurance policy. They may be a composite insured under that policy, or they may seek an assignment of the proceeds of the policy as various ways to protect their security. So having an understanding, if you are a lender, of whether and how these insurance policies are likely to cover loss that's been suffered is important. So I'm now just going to pass over to Ted, who's going to have a look at some of the key flags to look for when you are looking at an insurance policy. Over to Ted. And next slide, please.
Thanks, Steph. So, as Steph said, I'm going to be looking at the key points to look out for in a business interruption insurance policy to give you an indication of whether there might be cover under it. So, you've got a copy of the policy. What should you be looking out for? The first thing to check is whether the policy only covers property damage. So many business interruption insurance policies will only respond to physical damage to the property. And these types of policies are designed to respond to incidents such as flooding or fires. Now, for obvious reasons, these types of policies won't respond to COVID-19 because it's very unlikely that COVID-19 would have caused physical damage to the policy, to the premises. So first point, check whether the policy only covers property damage. The second point to look out for when you're reviewing a business interruption insurance policy is whether the policy has an exhausted list of covered diseases, which doesn't include COVID-19. So some policies might provide cover for diseases, but they'll specify the diseases that are covered. If there is a list, it's unlikely that it will include COVID-19. And again, these policies are unlikely to respond to COVID if it's not included in this specific list. The third point to check when you're reviewing a business interruption insurance policy is what the notification requirements are. So different policies and different insurers will have different processes and timeframes for notifying the insurer of a potential claim. It's really important to identify the process and be aware of any upcoming deadlines to ensure that the claim's properly notified. So have a look in the policy about what needs to be done and when, and make sure that you comply with these requirements. And the fourth point to check when you're reviewing a business interruption insurance policy is the specific type of wording that it includes in relation to cover for diseases. The Supreme Court judgment considered three main types of wording, and all three types of wording may provide cover for loss caused by COVID-19. I'll give a brief overview of what each of these wording looks like so that you can look out for it when you're reviewing a policy. The first type of wording that the Supreme Court looked at that might provide cover for loss caused by COVID is what's called a disease wording. Now, these are the most simple type of wording, and they provide cover for loss caused by the occurrences of a notifiable disease or some other categorization of a disease, such as human infectious or contagious, that occurs either at all or within a certain radius of the premises. So quite simply, these clauses provide cover for loss caused by the occurrence of a disease. The second type of wording to look for is a denial of access wording. Now, these types of clauses provide cover for loss caused when an authority acts to prevent or restrict access to the insured premises. Now, in the COVID context, we've seen many restrictions put in place by the government in response to COVID-19 that have restricted or denied access to premises such as restaurants, sports grounds, clubs, and so on. So these types of wordings can respond to loss caused by COVID. And the third type of wording that the Supreme Court looked at was what's called a hybrid wording. Now, these are clauses that provide cover for loss caused by an authority acting to prevent or restrict access to the premises, specifically in response to the occurrence of a disease. Now, again, like I just mentioned, in response to COVID-19, we've seen many restrictions put in place that prevent or restrict access to the premises, and these are in response to a disease. So once again, the Supreme Court found that these types of wording can provide cover for loss caused by COVID. Now, there are three headline points to take from the Supreme Court judgment in relation to these types of wording and the cover that they might provide to businesses. The first point to note is that the court interpreted all of these clauses broadly, and this means that they're likely to respond by loss caused by the nationwide pandemic, and businesses shouldn't be limited to loss caused just by specific local cases. Now, this was a really significant win for businesses, as it means that businesses won't have to point to specific local cases of COVID-19 as the cause of their loss. It will be enough to show that the nationwide pandemic has caused them loss, albeit that there's been local cases occurring. The second really significant point to note from the Supreme Court judgment is that businesses can recover loss if they've been able to partially open. So taking the example of something like a restaurant, they may have been able to maintain some form of takeaway or delivery service whilst having to close and stop their sit-in dining service. Now, the court found that businesses like this can claim for their losses in relation to the closed part of their operations, even though that they were still able to maintain some level of business and maintain some level of income through the pandemic. And the third important point to note from the Supreme Court judgment is that the actions of the authority that I mentioned in relation to those denial of access wordings and hybrid wordings, they don't need to be legally binding in order to trigger cover. So some of the government guidance and government advice that was issued could be enough to trigger cover, and it's not necessary to show that the actions of the government were legally binding. So those are 4 key points to check when you're reviewing a business interruption policy to see whether there could be an indication of cover. It's important to note that wordings differ greatly between policies, and every policy needs to be considered individually. So take time to read each specific policy in detail and consider these points to see whether there might be cover. Now I'm going to pass back over to Steph, who's going to look at how we can help and what we can do in relation to business interruption insurance policies.
Thanks, Ted. So yes, so how can we help and what can we do? Well, we recognise that every insurance policy is different and interruptions impact different businesses in different ways. There's no one size fits all solution. And so as a result, we are offering a fixed fee business interruption insurance review product, which has become very successful. As part of this product, what we do is we discuss with the business the impact of COVID-19, how that impacted the business and the losses that it suffered. And this enables us to understand how the FCA judgment might apply to that business. We conduct a detailed review of the various policy documents in light of the test case judgment. We explain what the findings in those areas mean for the business, and we assess the merits of the claim and advise what the policyholder might be able to claim for and the strength of such a claim. If we think that claim has merit, we will then work with you on challenging the insurer on your behalf with a view to then negotiating and securing a favourable recovery. And we can do that work on a contingent basis, which means that we share the risk with you by deferring our fee until the conclusion of the case, and the level of our fee is then dependent on the outcome of the case. So do get in touch if any of that is of interest. So that's the end of our kind of whistle-stop tour of business interruption insurance. I guess the takeaway point really is to think about business interruption insurance policies, how they may affect you, and in particular here in this space, the opportunities actually that they can present. And if you're unsure, please take independent legal advice. So thank you for joining us. We hope you found this useful and will join some of our future sessions and some of our future bite-sized training. Thank you.